Good morning, Steve Reed with Meridian Home Loans. Hope you're doing well today. Happy Tuesday. Hope you're having a great week so far this week. Just want to spend a few moments in this segment and go over how our interest rates are being affected by some of the news out, some of the global pressures and unrest really in the Middle East. We're seeing a little bit of that subside today. There really hasn't been much new news out of the Middle East. So with that, we see money flowing back out of our bonds back into stocks. So it's driving our bond market down a little bit. It's driving it down slightly. We're currently down about 9 basis points, which don't make a huge deal, but it's just headed in the negative direction. We're also seeing a little bit more hope out of Japan with those nuclear reactors. They seem to think there is some hope there that they have those contained. So again, with that being a little more certain than it was a few days ago, you're going to see investors take some more risks maybe in the stock markets and get out of some of the safe haven bond trade, which is going to lower the bond prices and in effect raises our interest rates. Now, the other thing I wanted to mention, we're seeing, and as I've talked about here before, the arch enemy of bonds and higher interest rates is inflation. And we're starting to see those inflation numbers creep up. I think out of the UK this morning, they came in with 4.4% year over year inflation, which is really high. And we're starting to see that factor into some of our consumer pricing. We're starting to see a lot higher costs for goods and services. And so when our inflation starts to creep up that way, we're going to ultimately see higher interest rates. The other thing I wanted to mention was in relation to rent. We're seeing more folks than ever before rent homes and apartments, partly because of the foreclosure crisis, short sales, that kind of thing. So we're seeing more and more renters. For the first time in several years today, it was released that there's less than a 10% vacancy rate among renters or properties that are being rented. So what that's going to translate into, as you know, with the law of supply and demand, if a lot of properties are rented, rent will ultimately go up. So that's inflationary as well. So with that being said, we're looking at interest rates kind of on the climb. So if you're looking to buy or refinance, it's a great time to go ahead and lock a rate. It pays to look at your refinance. Also look at the cost to refinance. Make sure it's worth the cost based on what you're going to save. But if you are in the market, it is a good time to lock these rates in before we see them go any higher. If we can help you, give us a call. Again, Steve Reed with Meridian Home Loans. Have a great week. Take care.